Have you ever wondered which trading style is truly safer, swing trading or day trading? Both are popular, both are profitable. But both also come with very different levels of risk, time commitment, and psychological pressure. In this video, we'll break everything down for you, the differences between swing and day trading, the pros and cons, which is better for beginners, and most importantly, which one is safer based on risk, strategy, and lifestyle. Let's dive in. What is swing trading? Swing trading is a style where traders hold positions for several days or even weeks. The goal is to capture swings in the market, medium-term price movements between support and resistance levels. A swing trader doesn't need to sit in front of the screen all day. They analyze charts, find a good setup, place their trade with a stop loss and take profit, and then wait. Swing trading usually uses daily or 4-hour charts. You get more time to think, it's less stressful, and it works well for people with jobs, students, or those who can't commit full time. But swing traders must be okay with overnight risk. News can move the market while you sleep. What is day trading? Day trading is a faster, more intense style. Traders open and close all positions within the same day, sometimes in minutes. They use 1-minute, 5-minute, or 15-minute charts. Their aim is to profit from small price fluctuations, a few cents or a few pips depending on the market. Day traders need to react fast, stay focused, and manage risk with tight stop losses. No trade is left open overnight, so they avoid overnight surprises. However, this speed comes with a price. More trades equals more stress. More decisions equals more mistakes, and emotionally, it can be draining. Key differences between swing and day trading. Let's compare them side by side. Feature: swing trading, day trading. Holding time: days to weeks, minutes to hours. Chart used: daily for H1 meter, 5 meters, 15 meters. Risk per trade: higher but fewer trades, lower per trade but more trades. Time required: 30 minutes a day, 4 to 6 hours a day. Emotional pressure: lower. High. Overnight risk: yes, no. Number of trades: few, many. Style: patience, planning. Speed, execution. Both styles can be profitable, but your choice should depend on your time, discipline, and personality. Which one is safer for beginners? For most beginners, swing trading is safer. Here's why. You get more time to analyze trades. You don't need to act in seconds. You're less likely to overtrade. You're not glued to the screen all day. Day trading can be dangerous if you're new. Fast decisions plus lack of experience equals mistakes. Also, many beginners get trapped in revenge trading, a common issue in day trading. Swing trading gives space to learn calmly with fewer emotional triggers. What are the risks of each style? Swing trading risks: holding trades overnight can lead to unexpected news gaps. Longer trades equals more exposure to market volatility. Patience is required, or you might exit too early. Day trading risks. High-speed decision-making equals more emotional errors. Require strict discipline, or losses can pile up fast. More trades mean more commissions, spread costs. Can lead to burnout. In both styles, risk management is everything. Without it, no style is safe. Who should choose swing trading? Swing trading is best for people with jobs or limited screen time, traders who like analyzing calmly, those who want less emotional pressure, beginners learning technical analysis. If you can hold a trade, stick to a plan, and not panic, swing trading will suit you well. Who should choose day trading? Day trading is best for full-time traders, people who love fast action and decision-making, traders who thrive under pressure, those with fast internet, a good broker, and zero distractions. But even then, day trading demands discipline. Without it, it's easy to lose money fast. Which is safer? So, which style is safer? For most people, swing trading is safer. It's less intense, easier to learn, and less likely to lead to emotional mistakes. Day trading can be safe only if you're experienced, you have time, and you follow strict rules. Don't choose a style based on hype, choose based on who you are. Your lifestyle, your psychology, and your time all matter more than the strategy itself. So be honest with yourself, test both styles, and see what works. And always remember, it's not about how fast you trade. It's about how well you manage risk.